Hello and welcome. Yesterday, the European currency ignored statistics on economic sentiment in the euro area and Germany. Although the indicators remained negative, they showed a slight increase in May. Nevertheless, Germany's ZEW gauge of current conditions decreased further. Of course, this is attributed to global geopolitical tensions, supply disruptions, surge in inflation, interest rate hikes, as well as a number of other factors. So it comes as no surprise that investors are fleeing risky assets. The situation is challenging not only in currency markets, but also stock ones. Besides, yesterday some FOMC members spoke about the future of the US economy. Thus, John Williams, Chief Executive Officer of the Federal Reserve Bank of New York, said that interest rate increases would not affect the labor market, while Cleveland Fed President Loretta Mester noted that interest rates could be raised by 75 points basis at the next meeting. Of course, much will depend on inflation data. Today's macroeconomic calendar involves Germany's Consumer Prices Index for April. In addition, some ECB members, including EBC President Christine Lagarde, are set to speak today. The European Commission will publish its economic growth forecasts. The key focus will be on the Consumer Price Index in the United States. The inflation rate is anticipated to accelerate by 0.2% in April compared to a 1.2% monthly increase in March. The annual indicators is forecast to stand at 8.1% against an 8.5% gain a month earlier. However, this upbeat data will hardly make it possible to avoid further inflationary pressures. The US regulators' measures to stop high inflation may be ineffective as price increases are no longer uncomfortable. Continued chaos in the commodity market as well as further supply problems will only add to inflationary pressures. Besides, strong job and wage gains will fuel inflation. Furthermore, Atlanta Federal Reserve Bank President Raphael Bostic is set to deliver a speech. Also, traders may take notice of core inflation data. The core CPI is expected to rise 0.4% or 6% year over year. That compares with 0.3% in March or 6.5% on an annualized basis. In this case, the US dollar may come under pressure while risk appetite will improve. Thus, US Federal Reserve policymakers will not have to deliver a series of aggressive interest rate hikes. This, in turn, will result in a recovery and an upward correction in the euro-dollar pair. From a technical point of view, volatility is currently low as market participants are awaiting today's important data on inflation. A false breakout at 1.0519 or price consolidation above 1.0571 coupled with a top-down test will create a buy signal. As I noted above, if the US inflation rate eases, demand for risky assets will increase. In this case, the euro will surge to 1.0638, where it will be possible to go long on the rebound with a view to catching an intraday correction of 25-30 pips. If bears are able to protect 1.0571, the price breaks below 1.0519 and inflation in the US and euro area member states keeps on accelerating. The euro will most likely drop to 1.0473. Long positions at this level can be considered only amid a false breakout. If the price falls below 1.0473, the way to 1.0426 and 1.0394 will open. At the mark of 1.0394, traders will be able to open long positions on the rebound, counting on the intraday correction of 25-30 pips. Speaking of the British pound, the situation is similar. A false breakout at 1.2372 and price fixation below 1.2304 coupled with its bottom-up test will create a sell signal. If the price breaks through 1.2261, the pound sterling will plunge to 1.2185 and 1.2122. At the level of 1.2122, it will be possible to open long positions on the rebound with a view to catching an intraday correction of 25-30 pips. If bulls are able to protect 1.2304 or the price consolidates above 1.2372 and test it from the top down, long positions will be relevant. In this case, the British pound will recover to 1.2441 and probably 1.2505. If the price tests the level of 1.2505, traders will have a chance of going short on the rebound. Short positions at 1.2441 can be considered only in the event of a false breakout. Well, let's see data on inflation and the market's reaction to it. Indeed, both currency and stock markets need a significant correction. Thus, an easing of inflationary pressures in the United States, albeit temporarily, will be a driving force behind the market recovery. Good luck.